Welcome back to the Profitable Mindset Podcast, everybody. Today, we're diving into the fascinating history of money and investments.
Yep, from bartering all the way to Bitcoin. We'll unpack how the financial systems we use today actually came to be.
Exactly. And get this, Roman soldiers were once paid in salt.
You're right, salt was really important back then, preserving food and flavoring meals, so it made sense as a currency.
I never knew that.
It's where we get the word salary, actually, from the Latin salarium.
Huh. So money has really taken many forms throughout history.
Oh, yeah. And each form reflects the resources and values of a particular place and time.
Makes you wonder what our money will say about us in the future.
For sure. But our journey starts way back with bartering, the very first kind of exchange. Imagine you're trying to trade your old smartphone for groceries today.
I'd probably get some funny looks.
That was basically bartering. You needed what was called a double coincidence of wants.
Meaning?
Both sides have to want what the other person has at the same time.
Ah, got it.
So you can see how that wouldn't work as economies grew bigger.
Yeah, way too complicated.
And that's where commodity money comes in.
Commodity money.
It's using stuff with inherent value as a medium of exchange, like grain, livestock, even cacao beans.
Oh, so things that people actually needed and used.
Exactly. Much more convenient than bartering every time.
Makes sense.
And as trade routes expanded, civilizations started using metals like gold and silver more and more.
Gold, the classic.
Right. Durable, portable, divisible. It was ideal for transactions over longer distances and in more complex economies.
Gold just has that allure, doesn't it? Shiny, rare, valuable.
Definitely. Both the inherent properties and that symbolic value made it a dominant form of money. Early societies even started shaping gold and silver into standardized weights or ingots.
Moving toward a more uniform system.
Exactly. Imagine if every merchant had their own system of weights and measures.
Complete chaos.
Right. So empires like Lydia in the 7th century BCE started standardizing coins, made transactions smoother, and it was the foundation for more economic stability and growth.
So those innovations set the stage for what we have today.
Pretty amazing to think about, right?
Definitely. And what about paper money? What did that come about?
Paper money, right. It's so common now, but it was revolutionary at the time.
I can imagine. No one wants to carry around bags of coins all the time.
Exactly. Well, it all started in China during the Tang Dynasty.
China, huh?
Merchants there started using promissory notes, basically IOUs backed by precious metals.
I see. A way to represent value without actually carrying all that weight around.
You got it. And by the Song Dynasty, these private notes actually evolved into state-issued paper money.
Wow, so that concept spread from there.
Throughout the world. And it transformed economies along the way.
But there must have been some challenges with early paper money.
Oh, for sure. Counterfeiting was a big one, and overprinting could lead to inflation. But the convenience of paper money was undeniable.
So it wasn't a smooth process, but it got us where we are today.
Exactly. And at the same time, we see the rise of institutions that became central to managing and safeguarding wealth. Banks.
Banks. It's hard to imagine life without them now. But where did they even come from?
Believe it or not, early banks in Mesopotamia were like storage units for valuables. Temples and palaces would hold grain, metals, and other precious possessions.
Interesting. So from guarding stuff to providing loans and facilitating transactions.
Quite the evolution, right? Then in ancient Rome, you have the emergence of private banking with argentari.
Argentari.
They handled currency exchange, deposits, loans, the groundwork for modern banking.
So it all starts coming together.
Yes. But it was during the Middle Ages in Italy that banking really took off.
Italy. I see a pattern here.
Right. The birthplace of so many things. In this case, it was largely thanks to the Medici family in Florence.
The Medici family, those guys were everywhere.
They introduced double-entry bookkeeping.
That's still how accounting works today, isn't it?
It is. A revolutionary system. Plus, they established branch networks all over Europe.
Talk about visionaries.
They really shaped not just the financial world, but history itself.
Amazing. And so as economies got more complex, central banks came into the picture.
Exactly. They regulate currency, manage the money supply, and keep things stable, like the referees of the financial world.
Keeping everyone in check.
You got it. But alongside banking, there's another crucial development: stock markets.
Stock markets, where fortunes are made and lost. It's where companies raise money and investors try to ride the waves of economic growth.
That's right. The roots of stock markets go all the way back to ancient partnerships and ventures. In ancient Rome, societates would pool resources and share profits and losses.
Kind of like modern-day stock ownership, right?
Exactly, spreading the risk and reward. And as trade expanded, the need for more formal systems grew.
Makes sense.
In medieval Italy, you had commenda contracts. Merchants would invest in trade expeditions and share the potential profits.
So financing those risky sea voyages to far-off lands?
It was a way to mitigate the risks while attracting investors.
Smart.
Then, in the 17th century, joint stock companies came along, further formalizing investment.
Like the Dutch East India Company.
The one and only, a massive trading empire, and their shares were traded on the Amsterdam Stock Exchange.
The first formal stock market.
Yep. It set the precedent for all the exchanges we have today.
Wow. So all these early forms of investment, it's mind-blowing to see how they paved the way for the financial markets we have now.
It all comes down to those basic human instincts: risk, reward, and the pursuit of profit. They've driven financial innovation throughout history.
We've covered a lot of ground already. It seems like money and investments have always been in flux, constantly evolving.
You're right. They reflect the needs of growing economies and changing societies. But one thing stays the same: the human desire to create and grow wealth. And that desire has taken us on quite a journey, from investing in land to the rise of modern portfolio theory and diversification. And that desire to grow wealth, it's led to some wild chapters in financial history. Like, in the early days, people invested mainly in tangible things, land, for instance, or trade expeditions.
That makes sense. Those are the obvious ways to build wealth back then. You could actually see the land you owned, and the goods from a trade trip were proof of your profit.
Right. Land gave you stability, you could get income from rent or farming, and financing expeditions, well, that had the potential for huge rewards.
But also big risks, I bet.
Oh, definitely. Risk and reward have always been part of investing. Then, as societies industrialized, the focus shifted to infrastructure and industry. Factories, railroads, those were the new hot investments.
It's like investing in the building blocks of the modern world.
Exactly. And along with that, we see bonds emerge, a less risky option compared to stocks.
So bonds were like the safer bet.
Yeah, they represented loans to governments or companies, and they offered a fixed return through interest payments. So less volatility than the stock market.
A more conservative choice for some investors.
Right. And around the late 19th, early 20th centuries, the idea of diversification gained traction, spreading your investments across different assets to reduce risk.
So not putting all your eggs in one basket.
Exactly. That led to more balanced portfolios, smaller losses, smoother returns over time.
The early days of what we now call modern portfolio theory.
You got it. As we learned more about financial markets, our strategies for navigating them also evolved. But we can't forget about one major system that shaped global finance for decades. The gold standard.
The gold standard. It's almost like a legendary era in finance, isn't it?
For sure. Currencies tied to gold. It fostered a lot of trust and stability for international trade.
I can see why. Stable prices, predictable exchange rates, it all makes trade much easier.
Exactly. It was like a universal measure of value, but there were downsides too. The gold standard was rigid.
Meaning?
It was hard for governments to react to economic downturns. They couldn't just print more money to stimulate things because they were limited by their gold reserves.
So it created stability, but also limited flexibility when it was needed.
Right. And as the world economy grew, the demand for gold increased faster than the supply. That caused imbalances and put a strain on the system.
So the world outgrew the gold standard.
Exactly. And that brings us to the system we have today, fiat money. No longer backed by gold, but by our trust in governments and institutions.
Fiat money, it all comes down to trust.
It does. And with fiat money, governments have more flexibility to manage their economies. Central banks can adjust interest rates, control how much money is out there, and implement policies to either boost growth or curb inflation.
Sounds powerful, but also risky.
It is. Every financial system has that balance.
Yeah.
Stability versus flexibility, managing risk while encouraging growth. It's a constant challenge.
So how did we handle those challenges in the 20th century?
Well, we saw the rise of new global financial systems, like the Bretton Woods Agreement after World War II, an attempt to rebuild and create a more stable and interconnected financial world.
I remember learning about Bretton Woods. It was a big turning point, wasn't it?
Absolutely. The goal was to create a stable international monetary system by pegging currencies to the US dollar, which was backed by gold. It also led to the creation of the International Monetary Fund, the IMF, and the World Bank.
organizations dedicated to global financial cooperation.
Exactly. Recognizing that financial stability couldn't be achieved in isolation. But even Bretton Woods faced its own set of challenges and eventually collapsed in the early 1970s.
Leading to
Floating exchange rates. This gave individual countries more control over their monetary policies, but also introduced more volatility in currency markets.
always a balancing act.
That's the financial world for you. But along with these big economic shifts, we also see a wave of technological innovations that are changing how we interact with money. It's making finance more accessible to everyone.
The rise of personal computers, the internet, mobile technology. It's all transformed how we get information, manage our finances, invest our money.
You got it. From floor trading to electronic platforms, online brokerages, fintech companies popping up everywhere.
Individuals have more control than ever before.
True. But this new world comes with its own set of complexities.
McGoy.
Well, the speed and interconnectedness of financial markets today can create a lot of volatility. Algorithms and high-frequency trading. Things move fast.
And with speed comes risk.
For sure. Remember the flash crash of 2010? Or the whole meme stock frenzy?
Right, where social media can actually move markets.
Exactly. It's a reminder that technology is powerful, but human psychology still plays a huge role.
Our emotions, our instincts, they all affect how markets behave.
Definitely. And speaking of human behavior, we can't ignore the growing focus on ethical investing, environmental, social, and governance factors, what we call ESG.
ESG investing. It's become a big movement.
It has. Investors are no longer just chasing profits. They're thinking about the impact of their choices on the world.
It's a shift in perspective. Financial success and social responsibility go hand in hand.
Absolutely. It's a sign of the times, and it's exciting to see.
It's clear that the history of money and investments is more than just facts and figures. It's a story of how humans have constantly innovated and adapted to create financial well-being.
And that story is still being written. As we enter the 21st century, we see things unfolding in some really exciting and sometimes unpredictable ways.
Yeah, it does feel like we're entering a whole new era. Blockchain, AI, cryptocurrencies, they're all challenging the old ways of doing things.
You're absolutely right. It's changing so fast. Let's start with cryptocurrencies. They've really captured everyone's attention.
They're everywhere these days. Bitcoin, Ethereum, and so many more. What's driving their popularity, do you think?
I think cryptocurrencies represent a fundamental shift in how we view money. They operate completely outside of central banks and governments.
That's a whole different system.
It is. They rely on decentralized networks and cryptography to secure transactions and to manage how new units are created.
So it's kind of a rebellion against the traditional financial systems.
You could say that, especially Bitcoin. It emerged after the 2008 financial crisis when people lost trust in the banks. It offered a vision of a more decentralized and transparent system.
Where individuals have more control.
Exactly. And the technology behind it, blockchain, is truly groundbreaking.
Blockchain, everyone's talking about it, but it's still a bit of a mystery to me.
It's basically a digital record of transactions, but instead of being stored in one place, it's replicated across a whole network of computers.
So it's distributed.
Yes. Each block in the chain contains a bunch of transactions, and once a block is added, it can't be changed. That creates a permanent and auditable history.
So it's like a shared tamper-proof record of every transaction that's ever happened on the network.
You got it. And this immutability, this transparency, it has huge implications, not just for finance, but for so many things.
Like what?
Supply chain management, voting systems, verifying identities, tracking ownership of assets.
Wow. It's a lot to wrap your head around.
It is complex, but also incredibly powerful. And while cryptocurrencies are still in their early stages, their impact is undeniable. We're already seeing the emergence of decentralized finance, DeFi for short.
DeFi. I've heard that term.
It's basically using blockchain to create financial services that bypass traditional banks.
So lending, borrowing, trading, but without the banks.
Exactly. Users interact directly with each other using smart contracts that automate everything.
Cutting out the middleman. But it sounds risky too.
It does come with risks. The cryptocurrency market is still young, not very regulated, and those prices can be volatile. But for some, the potential rewards outweigh the risks.
A hedge against inflation, a store of value outside the traditional system. I can see the appeal.
For sure. But beyond crypto, there are other big changes happening. Artificial intelligence is already making waves in finance.
AI. That's a game changer in so many fields.
And finance is no exception. AI is being used for personalized investment advice, automating trading strategies, detecting fraud, managing risk.
It's like having a supercomputer working for you.
In a way, yes, but we have to be careful with such powerful technology. We need to make sure these systems are developed responsibly, without bias and without unintended consequences.
That's a good point. Powerful tools need responsible hands.
Absolutely. As we move into this new era of finance, we need to stay informed and adapt, and make choices that align with our values and goals.
Well said. Throughout history, the world of money and investments has always been about change. From bartering to Bitcoin, we've seen constant evolution, driven by human ingenuity and the desire for a better financial future.
Couldn't have said it better myself.
To all our listeners, thanks for joining us on this journey through the history of money and investments. We hope you've learned something new and gained a deeper understanding of how things work.
The future of finance is in all our hands. If we keep learning, stay informed, and make responsible choices, we can create a more equitable, sustainable, and prosperous financial world for everyone.